Hello friends, today I am going to talk about balance sheet. In this video, I will show you the format in which the balance sheet is prepared by the Indian companies. I will also explain the terms used in the balance sheet and the format or the content what is reported in the balance sheet. If you have not watched my video on profit and loss account, please go to the channel and watch this video so that you get clarity about profit and loss account. And if you are new to this channel or if you have not subscribed to the channel, please subscribe to the channel so that you get more update in future. So let's start. Start with the first question. What is the need of preparing balance sheet? Why a company has to prepare a balance sheet, right? So to understand why it is required to prepare, let's understand the accounting flow. So accounting flow starts with journal entries. So whenever there is a business transactions, the accountant post the necessary journal entries in the books of accounts, right? Once the journal entries is prepared and posted, the next activities it get posted to respective ledgers, right? Like assets will get posted to assets. Any specific liability the company is posting journal entry, then that gets posted to the ledgers, right? Then from these ledgers, the trial balance is prepared, where all the ledgers will have its balances. And from the trial balance, the financial statement is prepared, which consists of profit and loss account and balance sheet. Now let's get into little bit more detail. So when you have the trial balance with the ledgers with the different balances, that can be classified into different buckets. The first one is expenses, second is income and gain, third is assets, fourth is liabilities, and fifth is capital or return earning, which relates to the owner, right? Now, this expense and income will be reported under profit and loss account. And why the profit and loss account is prepared? To determine the profit or loss of the business for a particular period. Okay. So this group of ledgers will be reported under profit and loss account. The remaining part, that is your assets, liabilities, and capital, will be reported under balance sheet. Now, what the balance sheet is going to tell to the shareholders or to the stakeholders. So balance sheet will report the asset and liabilities which the business is holding on a particular day. Okay, so balance sheet is very important from the shareholders point of view to see that whether the company has sufficient fixed assets, whether the company has sufficient current assets which can be converted into cash in future, and what is the liability the company is holding. So it gives more about the financial status, okay, of the company on a particular day. Now let's check in what format the balance sheet is prepared. So what I'm going to do now is that I'll be showing the format only for the assets now. Then I'll talk about asset items which need to be reported. And then I'll show you the format for liabilities and the liabilities items which need to be reported. So this is how the format is going to look. Okay. You start with the company name at the heading, for example, XYZ Limited. Then you write balance sheet. All amounts are in Indian rupees unless otherwise stated. Okay. And then you can see there are two columns here as at 31st March 2025 and then as at 31st March 2024. You have to always give your preceding year or you can say previous year number as comparative numbers, right? Now, coming to the left side where we have assets, you can see there are two categories, non-current assets and current assets. So to give more clarity about non-current and current, non-current are long-term assets, okay? Or you can say assets where the company has no intention to get the asset converted to cash in future. Future means in within 12 months, okay? Or where you are going to get money from your customers or from any other person after 12 months. Okay, we'll have more clarity when I'll explain you different terms. But now you can see non-current, under non-current you have property, plant and equipment, capital work in progress, right of use assets, financial assets, deferred tax asset, and other non-current assets. Okay. Once you report non-current assets, then the second category is current assets. Under current assets, you have inventory, financial assets like trade receivables, cash and cash equivalent, other financial assets, and other current assets. And generally, current assets are more like liquid in nature. That means you are converting these assets very quickly. That means within 12 months time. Hence, it is categorized as current assets. And the total, your total non-current asset and current asset total is reported as total assets. So let's start with the first one, that is property, plant and equipment. Both tangible and intangible assets are reported. Gross block, accumulated depreciation. Depreciation for the year is reported And below is the format which is generally used by the companies. So if you see in the format, you have asset categories, right? It could be tangible assets, it could be intangible assets. If the company is not having any intangible, then no need of reporting that. And then you have gross block, then you have accumulated depreciation and the net value. Okay. So I'll show you one example so you understand how it is reported. Let's take the example of land. Okay. In gross block, you have to give the moment, that is the opening balance, additions, deletions, and the closing balance. Okay. Similarly, in accumulated depreciation also, you have opening balance, additions. Addition means the depreciation posted during the year, then deletion and balance as on 31st March 2025. And what is net value? Net value is your closing gross block minus the closing accumulated depreciation, which is generally called as written down value, right? So one example I can show you here, like land, you had opening balance of 10,000. There is no addition of land during the year. Hence the closing balance is 10,000. There is no depreciation because there is no depreciation on land, right? Hence the net WDV is 10,000 rupees. Coming to building, you have opening balance 20,000, addition 4,000, no deletion. Hence the closing balance is 24,000. That is on the gross block side. On accumulated depreciation, you had 3,000 opening. Addition during the year is 2,500. Deletion nil, and your balance as on 31st March is 5,500. And what is the net WDV? Net WDV is gross block was 24,000 minus your accumulated depreciation closing is 5,500 and net is 18,500. So this is how the format is used, and it is not limited that this particular format will be used by all companies. So if you have different asset categories, you can list down that as per the Companies Act requirement and prepare this format. One thing you have to keep in mind that the depreciation has to be as per the Companies Act. You can't have a different depreciation rate unless management explains why you are having a higher depreciation rate compared to the Companies Act. But this is the format what is generally used by all companies. Next item which need to be reported is capital work in progress. So what is capital work in progress? Capital work in progress are the assets which are not yet ready to use as on the date of preparing the balance sheet. For example, like building construction, installation of huge machineries, right? Because these activities are not completed, you can't capitalize nor you can charge depreciation. Okay, so these all assets are in progress. So what is the template or format you need to report? You can see this standard template as per the Companies Act requirement. You have to prepare and report. You will have in the left side projects in progress, okay, and projects temporarily suspended, and then you are giving the aging of the work in progress. So less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, and the total. Okay, so if you see here as an example I've given project in progress 10,000, 30,000, 20,000, 3,000, and the total is 65,000 rupees. Now projects temporarily suspended, like 1 to 2 years, I've given a number here 15,000 rupees. Here your auditor may challenge you that why this is temporarily suspended. Are you going to restart again? If not, then the auditor may ask you to write off this because you are not going to use this asset, right? It may be because of some technology change, because of any other reason, the project is on hold and nothing is moving forward. Unless the business comes with a specific reason why there is any temporary hold, unless it is clarified to the auditors, the auditor will ask you to charge it off. So this is the format which will be used for CWIP. Next item which need to be reported is RU assets, right of use assets. So RU assets refer to assets that are used by the company but not owned by them. Okay. So RU assets are recognized on balance sheet when a company enters into a lease agreement, giving them the right to use an asset. Example like property, equipment, or vehicles for a specific period. Right. I'm not going to talk how this valuation is done. That will be mostly covered under your Ind AS 116. But I'm going to talk about the presentation in the financial statement, how it will be presented in the financial statement. So here, if you see, this is the format to be used. You will have different categories like building, car, plant and machinery, or if any different category of lease you have, you can put there. And then the format is movement from opening to closing. So opening balance as on 1st April 2024, you will have the values. Addition during the year, that means if you have taken any new lease during the year, then that has to be reported as addition here. Less amortization, the depreciation will be for the period of lease, so you have to depreciate that. And then the closing balance. So opening plus addition less amortization is the closing balance. And this number has to be reported in the balance sheet. Next point which need to be reported is financial assets, non-current. Non-current means which you are not going to receive in next 12 months time, right? So here few examples are there, like security deposit. If you're given a security deposit where the maturity is after 12 months, then that need to be reported here. But yes, you need to do the fair valuation as well, right? So you have to take out the present value of this security deposit, and the difference between the actual payout and the fair value has to be charged out to rent. Then you may have like derivative financial assets. Those also, if it is going to be matured after 12 months, then you have to show it as financial asset, non-current. Next item which need to be reported is deferred tax assets. So a deferred tax asset is an item on the balance sheet that results from an overpayment or advance payment of taxes because of temporary difference between accounting and tax books, right? So because of certain items allowed, not allowed under tax books, that item is transferred to next years or future years, right? And you will be getting the tax benefit in those years in which year you are going to claim that. And it is opposite of the deferred tax liability, which represents income tax owed. So this is a template, not that all this item what is there in the template will be applicable for every company, but it is a standard template to give a clarity that how the deferred tax asset or liability is calculated. So you can see there are 2 years here, current year and previous year, and deferred tax asset arising from, that means the temporary difference you are writing down here, defined benefit obligation, for example, for employees, provisions, RU assets, other items, less deferred tax liabilities arising from plant property equipment financial assets. The difference between assets and liability is reported as deferred tax asset. That means if the deferred tax item are higher than deferred tax liability, then the difference between both will be shown as deferred tax asset. However, if it is a reverse situation, that means your deferred tax liability is more than your deferred tax asset, then instead of reporting as deferred tax asset, you have to report as deferred tax liability. That means in future, you are going to pay more tax because of the temporary difference adjustment during, because of adjustment in the during the year. Next item which need to be reported is other non-current assets. Okay. And what are the examples here? You have advance income tax, which will be reported net of provisions, right? So the tax what you pay to the government authorities has to be reported here. Then prepaid expenses, any prepaid expense which you are going to amortize to expenses after 12 months, that portion will be reported here. Similarly, capital advance, long-term capital advance, balance with government authorities. That means you have tax credits with the government, but the utilization will happen only after 12 months. Okay. So if that situation is there, you have to report it here. And then other deposits, it could be your electricity deposit or any other deposit where you are not going to recover the money in next 12 months time, has to be reported as other non-current assets. Next one is inventories. This is very important in case of manufacturing unit. The term inventory refers to raw material used in the production as well as goods produced that are available for sale, right? So how the template or how it looks, the format looks, raw material and components will be reported, work in progress will be reported, finished goods and stock in trade, right? Stock in trade is generally used in case of trading business, but as if a manufacturer is doing trading as well, then the format will include manufacturing stocks as well as the stock in trade stocks. One thing you have to keep in mind that these stocks has to be valued as per the company's policy. That means if the company is following FIFO or weighted average, then you have to revalue these inventories and report it under those methods. Okay, because certain companies they follow standard costing. Standard costing is not allowed as per the accounting standard. Hence, you have to rework or revalue your inventory to weighted average or FIFO, and the difference of that you can charge to cost of goods sold. Next item to be reported is trade receivables. So amount receivable from customer for sales of goods or services is reported as trade receivable. So under trade receivable, there will be two categories. One is trade receivable from other parties and receivable from related parties. So these two categories has to be reported under trade receivables. However, if there is any doubt on collection from any customer, that means we feel that after a lot of dunning process, the amount is not coming to the company, then the company can take a provision for the doubtful debts. And that provision has to be netted off under trade receivables. That means the amount what you're going to report under trade receivables should be the net amount after adjusting the provision for doubtful debt. One point you have to keep in mind that under this format, you have to report the trade receivable aging as well to give more clarity to the shareholders that what is the aging of your trade receivables? Are there something old trade receivable for which you have not created provisions? So all that clarity will come only when you prepare the trade receivable aging. The next one is cash and cash equivalent. Under cash and cash equivalent, it's mostly the liquid cash you have to report for the company. So the format you can see here, you will have to report fixed deposits, balances in banks, right? Your current account or EEFC account if you are holding any foreign currency, cash balance. Next item to be reported is other financial assets. So you can see the format here. It is security deposits, right? Unbilled revenue. That means if anything you have missed out to bill it and you have not invoiced it, then you are accruing that revenue, right? So that will be reported here. And unbilled revenue related party. So if something is not billed to your related party, that also has to be reported here. And all this will be under other financial assets. Next one is other current assets. So any other current assets has to be reported. Okay, this list what I'm showing here is few examples, but as a company you can have more items in that. So for example, like prepaid expenses, advance to employees, advance to suppliers, balance with government authorities. So all these are current. And why it is treated current? Because the company believes that these amounts can be converted to cash or can be utilized in next 12 months. Okay, whatever is beyond 12 months, that is already reported under non-current. Whatever within 12 months is reported under other current assets. Now let's understand what is the format used to report equity and liabilities. So the format looks same, only the items I have to explain you. You have equity, equity share capital, reserve and surpluses. This together will be total equity. Then you have liabilities. Under liabilities, again, similar to assets, you will have here non-current liabilities and current liabilities. Non-current are long-term, where you are going to discharge this liability only after 12 months. Current will be which you are going to discharge in next 12 months time, right? So under non-current liabilities, you will have financial liabilities. Under that, you will have borrowings, lease liabilities. Then you will have employee benefit obligations, right? Under current liabilities, you will have financial liabilities again, borrowing, lease liabilities, trade payables, other financial liabilities, employee benefit obligation, and other current liabilities. So I'll explain you each and every line item in upcoming slides. The first item which need to be reported is equity share capital. So under this, you have to report about your authorized capital, okay, which is approved by the Ministry of Corporate Affairs. So for example, here you have 1 lakh equity shares of 10 each. So 10 lakh rupees will be reported authorized capital. Below that, you have to show out of authorized capital, how much has been issued, subscribed and paid off capital. So for example, here out of 1 lakh equity shares, the company has only issued 60,000 equity shares. So that has to be reported here. 60,000 equity shares at the rate of 10 each is 6 lakh rupees. Now, reserve and surplus. Under reserve and surplus, you will have different type of reserves here, like capital reserve, general reserve, okay, and then surplus in the statement of profit and loss. So when you prepare the profit and loss account, you will have a profit or loss that has to be transferred to the equity fund, right, under reserve and surpluses. So here is the table what you are showing to the shareholders. That balance at the beginning of the year, add profit or loss for the year adjustment, then if there is any other comprehensive income, that has to be adjusted, okay, and the net will be the net reserve and surplus which is available to the shareholders. Next item to be reported is borrowings. So company can have different type of borrowing, you can list down here. So as an example I've shown here, term loan from banks, you have to report it here. Is there any ECB loan? If yes, then you have to report external commercial borrowing also. In term loan, you have to keep in mind that if there is an interest which is due and you have failed to make payment, okay, that has to be added here. Okay, so keep in mind that if any interest which is not paid, then you have to add it and report it under term loans from bank. The next one is lease liability. This is similar to the RO assets what I explained. Under lease liability, again, this is the format which will be used. You will have opening balance again for different category of lease what the company has taken. With opening balance, you have to add new additions. That means if there is a new lease during the year, you have to report that. Finance cost accrued during the period. So because you are doing a fair valuation, right? Present value, the finance cost will be added here. And then payment made to landlord, correct? So whatever payment you've done during the year to your landlord, the same has to be reduced here, or to the company from whom you have taken the lease, the same has to be reduced from here. Then you will have the closing balance. One thing you have to keep in mind that this lease liability has to be classified into non-current and current. That means any lease liability, whatever you are going to pay after 12 months, that has to be classified as non-current, and what you are going to pay in next 12 months from the date of reporting, that has to be reported as current liabilities. Next item to be reported is employee benefit obligation. and this is mostly relating to the retrial benefits like provision for gratuity, provision for leave encashment, provision for retention bonus if the company has issued any bonus letters to the employees. And generally, this is prepared or calculated by the actuary. So the company should appoint an actuary valuer who will do this valuation. And in the report of actuary, you will find that this liability is classified into current, non-current. Okay, non-current means what you are going to discharge after 12 months, and current is mostly what you're going to make the payment in 12 months. But obviously, it is scientific and it is estimated, so you have to take that number. Coming to the next one, it's trade payables. Under trade payables, you have to show into two category. One is total outstanding dues to micro and small enterprise, and total outstanding other than micro and small enterprise. Apart from that, you have to report what is outstanding for the related parties, right? One thing you have to keep in mind here, ensure that all the foreign currency trade payables are restated as per the closing rate, right? So you have to do the restatement if you have any foreign vendors. And interest accrued on MSME vendor has to be reported here. Okay, if you have not made the payment within 45 days to the MSME vendors, then mandatorily you have to create a interest liability for those MSME vendors, and that has to be reported here under payable outstanding to MSME. Next item which need to be reported is other financial liabilities. Similar to other financial assets, you will have other financial liabilities. So items could be like your capital creditors, interest accrued and not due on borrowings, payable to dealers, or any retention money which is not paid to the supplier. All has to be reported under other financial liabilities. And the last which you need to report is other current liabilities. This could be your advance from customers, unearned revenue, right? That means you have billed excess, and it is not supposed to bill, but you have billed excess, so that has to be reported here. Employee benefits payable, which are current in nature, that has to be reported here. And statutory liabilities like your TDS, PF, or any statutory liability which is due to be paid within next 12 months time. Okay, so that's it from my side. Hope you understand the format. I tried my best to explain, as I explained in the beginning, that different company may have different line items based on the complexity of the business. But these are the general items what I explained, and you will find in most of the companies. Okay, you can go through many annual reports to understand more about the balance sheet, how it is reported. Thanks for watching. And if you have not subscribed to the channel, request you to subscribe and share with your friends. Thank you.